Hims & Hers stock went absolutely crazy on Wednesday. Shares are up 19% late in the trading day as I'm recording. And I just wanted to explain exactly what's going on short term and why this continues to be one of the stocks that I am most bullish on long term. Hims & Hers has had a phenomenal run just over the past 2 years. But keep in mind that this is a stock that is still relatively cheap. About 6.5 times sales is where it's trading at. Stocks that are growing this quickly typically trade for 20, even 30 times sales. They can even trade over 100 times sales with companies like Palantir. And remember, Hims & Hers is growing faster than Palantir right now. So there's a lot going on with Hims & Hers, but I want to highlight how revenue growth is driving the company, what analysts are expecting over the next year or two, that you may be surprised at how little growth they're expecting over the next couple of years, how margin expansion is playing into the business, why there's likely a short squeeze going on. And then fourth, I'm going to look at how valuation plays into the future for Hims & Hers, because I think there's an opportunity for tailwinds behind all of those things, maybe in the next week, but definitely over the next 5, 10, 20 years. And this is a long-term investment for me. My name's Travis Hoyam. Thanks for watching Asymmetric Investing. If you want more from me, check out my newsletter, Asymmetric Investing. This is where I do deep dives on stocks like Hims & Hers. I did that in the spring of 2024. So this has been one of the top performing stocks in the portfolio, but it's not the top performer. That's actually Robinhood. That is up over 600% since I started adding it to that portfolio. But that portfolio, I buy stocks once a month, started from zero. So I'm showing you how to build a portfolio from scratch. Really had phenomenal performance there. So love to have you as part of that community. And I want to thank this video sponsor, Fiscal AI. If you're not familiar with Fiscal AI, you should be. This is the best research platform that's out there today. I'm going to use it throughout this video. But you can see you got all of the statistics you need right here: market cap, price to earnings multiple, price to sales multiple. You get compound annual growth rates over the last 3, 5, 10 years. You get a nice stock chart here. And then it's got all of the financials under this tab, including segment KPIs. So you can pull things like the number of subscribers that Hims & Hers has. What's the average order value? And then you have transcripts for all of the conferences, all of the earnings calls. This is really just a one-stop shop for investors. So whether you're an individual investor or you're a professional investor, they've got solutions for you. If you want to try out their pro version for free for 2 weeks, go to fiscal.ai/ASYM. If you like what you see there, you can get 15% off at that link. So this is a tool that I pay for, so I'm putting my money where my mouth is. But let's use Fiscal AI to look at the revenue side, because I think this is really the market's focus right now. You can see that in the last quarter, we had a little bit of a dip in revenue growth. So what's going on here is that Hims & Hers is absolutely a growth company. But the question is it a company growing at 50% a year, or is it a company growing at 90% a year? The most recent quarter was the first quarter that they had that did not include GLP-1s when they had an exemption. So that was when Hims & Hers was able to compound GLP-1s and basically serve them to anybody that came to them with a weight loss issue. That exemption ended at the end of the first quarter. Hims & Hers pushed those customers then to things like weight loss pills. They've got other offerings. But instead of a tailwind, GLP-1s kind of became a bit of a headwind to Hims & Hers' growth. So that's the question that investors have been asking themselves is, what does that growth rate look like in the back half of 2025? Well, there's been 2 things that have happened recently give a little bit of comfort that growth is going to be solid over the next couple of years. So in September, they announced that they were launching oral testosterone and expanded personalized treatments, basically just moving into that testosterone business. So that should be a great growth business for Hims & Hers and expands the specialties that they have on the Hims app. Now, what was announced on Wednesday was an expansion of the Hers app into perimenopause and menopause. This is another product, just like testosterone, that we knew was coming, that we knew was in the pipeline, that was likely going to launch in 2025. But they are now here. And so investors are starting to reassess, okay, what does the growth look like as you have testosterone, menopause, and perimenopause start to be things that are attracting new customers or offerings that you can bring to existing customers. So now the growth story becomes a little bit clearer. We know a little bit more like what GLP-1s, what weight loss is going to look like. And I think the focus on GLP-1s is starting to subside for the market at least. A lot of the questions around the last couple of quarters has been, what's the impact of GLP-1s is going to be? I think a lot of investors still think this is a GLP-1 company, but it's not. That's still a relatively small segment for the business overall. And this is the part that I think is a little bit crazy. You can look at the estimates, the forward estimates for analysts in Fiscal AI. This is the estimates for 2025. I don't think that's particularly relevant. These are likely to be in the range of what they actually report, but analysts kind of know what's coming over the next couple of months. But what's coming over the next year? That's where I think we could be really underestimating the potential, because Hims and Hers said that the Hers side alone should be $1 billion business in 2026. That is a relatively small business today. But look at these numbers down here. Analysts only expecting $2.8 billion worth of revenue. If the Hers side of the business does do $1 billion worth of revenue, I think the Hims side is going to do well over $2 billion. And that wouldn't even be that much growth for the business. So that could mean a solid revenue beat. That means things like upgrades, increased revenue growth expectations. So the revenue growth side, I think, is a clear story for Hims and Hers. It's all about increasing the number of subscribers. So that's what you see here in the column. They're up to 2.44 million subscribers. That number continues to go up, even though you had GLP-1s rolling off in the most recent quarter. So the number of subscribers continues to go up. The average order value has really shot up. This is in part because of GLP-1, but even if we go back to middle of 2024, $109 per order, I think these numbers are still going to be heading up and to the right, even if there is a little bit of bumpiness as you don't have as many GLP-1s being sold. But now when you move into some of these new areas, testosterone, perimenopause, menopause solutions, longevity is the next thing that they're bringing to market. That's going to expand the market. So the number of people and the amount that they're spending each year and each quarter, I think is going to continue to rise. This is a solid growth story, and the market still isn't really pricing that in. I'm going to come back to that valuation piece because I think that plays into it as well. But let's talk a little bit about margins, because this is the other story. This is the question that I had, and the reason that I didn't invest in Hims and Hers until the spring of 2024. So at that point, I was wondering, was Hims and Hers on what I would call a customer acquisition treadmill? So it's very expensive to acquire customers in a business like Hims and Hers. So let's say it costs $100 to acquire a new customer. You now have to make $100 in profit to be able to pay for that. If they're only doing one order and you only make $50 in profit, you're actually losing $50 per customer. And so that's what you see in these negative net income numbers. When a company is growing really quickly, but they're reporting negative net income, you don't really know as an outside investor, what is the economics? What is the customer acquisition cost? What's the long-term value? You can kind of start to project those things. But once you start to get to positive net income and these operating margins, that's what this orange line here is. Once these operating margins start to go positive and they start to continue ticking higher, that's telling you that the business is working the way that it's supposed to. So I think margin expansion is going to be a continued opportunity for Hims and Hers. Management said a couple of quarters ago, they expect 1 to 3% expansion in margins over the coming years. So let's say that those compound, we could get to a 10% operating margin while Hims and Hers continues to grow revenue. That's how you get a stock that deserves a much higher valuation. Not only do you have revenue growth, but you also have margin expansion. I think we're going to get both of those things, especially going into 2026 as we move past the GLP-1 comps and into a more steady state as you have more products. ED, hair loss, testosterone, and menopause start to be sort of the core business. And then weight loss becomes a contributor, but it isn't the same focus that it was over the past year for investors. So look at this margin expansion. Look at margins over the next few quarters and in through 2026. If they continue to expect expansion in margins, that means the bottom line is going to get better. And that is phenomenal news for investors. Number 3, and this is going to be more short-term in nature, is I think we definitely have a short squeeze going on. This is information from FinViz, and the numbers are a little bit small here. But as of the end of September, there were 71 million shares sold short, or 35% of the float, according to FinViz. This short interest has been rising since winter of 2024. So even as the stock has gone up, investors have been betting against the company. Now, eventually, all of these people who are short the stock need to buy it back. You're borrowing the stock to sell it, and then you need to buy it back eventually to close out that position. So what happens is once a stock starts to move higher, typically those short investors eventually are squeezed out. They just say, you know what, I can't take this anymore. I've got to buy the stock back. And that actually helps push the stock higher. That's what a short squeeze is. We've gone through a few of these moments with Hims and Hers. You can see in January 2025, the stock just went parabolic and then it dropped back down again. But I think we could see the same thing happening here, because remember that short interest now is even higher than the short interest was in January. So keep an eye on that, at least as a potential short-term driver, and see what happens with that short interest if the stock continues to move higher. The final thing, the fourth thing that investors need to think about is the valuation for Hims and Hers. If you think this is a business that's going to be much, much bigger in the future the way that I do, then the price is actually not all that high today. A $6 0.4 price to earnings multiple. I think this would be based on yesterday's close. So this would be slightly higher after the move today. Price to earnings multiple is 72. But remember, I just talked about the fact that net income, the company just swung to net income. Those margins continue to go up. So I'm not too worried about this price to earnings multiple. Let's just take that off and focus on the price to sales multiple. You can see that that's effectively gone nowhere, but the stock has gone up because the company has grown so much. So we actually haven't seen all that much multiple expansion for Hims and Hers. That's another thing that could drive the stock higher. I wouldn't be surprised eventually to see this company trading for 10, 20, 25 times sales. Given the growth trajectory, if this growth momentum continues, given the margin expansion, it deserves to trade for a much higher multiple than it's trading for today. So again, when I say that this stock has 10x potential, maybe even higher than that, this is why. You have revenue tailwinds, you have margin tailwinds, and then throw in a short squeeze. And the opportunity here, I think, is still tremendous for investors, despite the fact that this has been a phenomenal performing stock over the past year and a half. But again, let me know your thoughts about Hims and Hers in the comments section below. If you want my full deep dive, I'll put a link to that in the show notes. And check out Asymmetric Investing. I think you're going to like the research and the community there. And check out that asymmetric portfolio. Like I said, that's beating the market by a wide margin because of the performance, like companies like Hims and Hers. This is the kind of company that I'm looking for, ones that have 10x, 100x opportunity over the next 10 years. I think Hims and Hers squarely falls in that position. That's why it is one of my biggest holdings. Let me know what you think in the comment section below. Thanks for watching, everybody. See you here next time.